So Paul, well done on your latest set of results, some superlative numbers there, but you're talking about quite a big growth program. You know, you've been producing at a level of about 2 million tonnes and you're talking about going to 5 million tonnes. How are you going to do that?
Well, look, we set ourselves a 2 million tonne target 5 years ago. At the time, that appeared a stretch target as well. We are there, the production platform's established. To take it to the next level, we can use our existing portfolio, pipeline of development assets, and that will take us some of the distance there, but we are actually looking for acquisitive growth for new and additional projects.
And you've had quite a good acquisition with Valkrans. Is that the sort of opportunity you're looking for?
Absolutely. I mean, we're not particularly interested in competing against people in these acquisitions, so we're going to have to, as they say, box clever and find opportunities as they present themselves. But we're running 3 coal washing plants, we've got 2 operations, we've got underground mining capability, an underground fleet of mining equipment. That makes us, I would hope, a more attractive partner than someone who's simply bringing shares listed in London or Australia.
And are there any stressed assets around, or mini stressed assets around at this point?
Well, we've seen a lot of assets come past. The good opportunities are not that frequent, I have to be frank. But I'm not seeing a huge degree of stress yet.
And when we spoke to you 5 years ago when you listed, you said it was a no-brainer to go into coal. Eskom was had a huge appetite. Do they still have that strong appetite, and is the local domestic market still a good area to play in?
Yes, we've built a business on that domestic market with Eskom sales, with 5-seam sales, with anthracite into the local smelting industry. So we're a domestic coal player. We do export now at Valkrans with our higher ash anthracite that goes to Brazil. But fundamentally, we've built our business on the domestic coal market, and we've proven that that's possible. There is undoubtedly a linkage between export coal prices and domestic coal prices, which wasn't the case more than 5 years ago. We saw that coming, and I think there's real money to be made domestically. We're in the metallurgical coal business, very firmly in the metallurgical coal business, and demand for metallurgical coal internationally affects directly the price at which we sell anthracite and 5-seam low contaminant coal within South Africa. And why that is because South Africa, certainly until now, has been dependent on imports of coking coal, or at least international pricing for coking coal. Our anthracite and our 5-seam coal is used as a substitute for market coke or for premium coking coal within the South African metallurgical industry. And South Africa has a very large installed base of smelters, thanks to Eskom over the years, and those smelters are under tremendous cost pressures. So they're looking for cost savings wherever they can, and one of the most obvious ones was to change their blends away from high-priced metallurgical, internationally traded coking coal to locally provided anthracite and 5-seam, our low-contaminant, high-vitrinite or vitrinite-dominant coal. I've got a chart here that shows expectations of increases in demand, or accelerating demand for metallurgical coal internationally, which bodes well. That, combined with increased cost pressures on South African smelter operators, should see good support for local metallurgical coal prices. The people who are running smelters and using electricity are under tremendous cost pressures, and they've got to find alternatives to expensive imported coking coal. And that's where we sit with our 5-seam coal and anthracite.
And we've got quite a big smelter population, and at one stage they closed down their operations. Are they back to normal now, and do you feel that demand coming through?
Well, that's interesting. Of course, Eskom's literally been buying back the power from the smelters, and we saw that in the industry, just seeing where our anthracite is going. What is interesting, though, is that amongst the different technologies used, for example, in ferrochrome smelting, the lowest cost uses the most anthracite. So we've actually seen the switch to the low. They obviously always turn off the higher cost smelters first. The lower cost smelters are the ones that need anthracite, and actually can result in an increase in demand for anthracite, despite there being a net reduction in the number of smelters running.
We've just had a presentation from Keaton. What are the main points you take away from that presentation?
Well, firstly, I think it was a dramatic operational turnaround. The facts are there: a 5-fold increase in profits, a 783% increase in earnings per share, I mean, nobody can take that lightly.
We're going to be pragmatic. There aren't that many opportunities out there. We'll take what comes. But in my, late at night, perhaps what it is, it's a underground thermal coal export grade mine in the Ermelo district, perhaps, close to a railway line. I think something like that, producing 30 to 50,000 tons a month, would be a very nice addition to our portfolio.
In terms of the acquisitions that you are looking at, would these entail domestic product or export?
I would like to add diversity to our products. We've taken a very pragmatic way to the way we've built our business, is that we've built the business on the back of the business being available. Eskom needed coal, we had an asset, we built the mine. We have free on truck 5 seam being sold off our Van Gautfontein mine at a significant premium to what people get after railing it to Richards Bay. There is a 20 million ton a year domestic market for coal. So I'm a little bit bored, quite frankly, with people saying that you have to have export allocation to build a coal business. We've proven that you don't. Our targeted production is less than 2% of what South Africa produces.
And how good is Transnet's service at the moment?
We've had fantastic service down at our siding from Valkrans. We've had 17 trains in 2 weeks. So we've had great service from Transnet.
We see that the net asset value of the company at about R4.45 is actually above the share price at the moment. Do you think that there could be some sort of re-rating in time?
I definitely believe so. With this management team, the stock price will rebound.
We've established a 2.7 million ton per annum production platform. We clearly did that during the course of the year and started delivering Eskom coal in June. We delivered 1.2 million tons to our various customers. Our revenue clearly reflects that massive increase in volumes. It's up to 474 million rand. You can see that this is going to be a very large business once fully ramped up.